Okay, and I will share my screen. All right. Okay, welcome to the Military Advantage, using your VA entitlement to build wealth. I am here with Caleb Salvi from One Stop Mortgage, and we just want to let you know that this guide is meant to provide helpful tips about VA loans. And if you have further questions, please reach out to us after the webinar. So I'd like to take a moment and introduce Caleb Salvi with One Stop. He is a loan officer and a prior service member. Take it away, Caleb.
Absolutely. It's a pleasure to be with you guys tonight. I really look forward to meeting all of you. Please don't hesitate to reach out. Like Jessica said, I look forward to meeting all of you one-on-one. Just to give you a little bit of background on me, I grew up in Pittsburgh, Pennsylvania, working in my dad's Italian restaurants, actually. From there, I went on to, go to college at University of Pittsburgh, graduated with a degree in finance and marketing. And I also went on to serve 6 years in the Army National Guard. I had a great time in the military. It was where, I met my closest friends. I grew up a lot in the military. And, when I left, I always wanted to continue to serve in a way. And starting out as a realtor, actually, all of my deals were with my fellow service members. They were with the guys in my unit, right? The people around me. And with that, I learned a lot about the VA loan and how I could help, the guys around me buy their first homes and build wealth and make smart financial decisions for themselves. So, after being a realtor for about 2 to 3 years, I went on to be a VA loan specialist at a company called New Day USA. They are a direct lender that specialize in doing all VA loans. Okay. Now, as I went through that part of my career, I was able to help so many families, get out of debt, purchase their first homes, refinance to make other investments, you name it. We did it with the VA loan. Now, when it came time for me to purchase my own home, of course, I wanted the best deal for myself. And I went and, I shopped the market. I wasn't allowed to do my own loan at the company. I had to go elsewhere. So when I went shopping, I discovered One Stop. And what makes One Stop different is One Stop's, we're a brokerage. And what a brokerage is instead of having our own products, our own, price, rate, and term, we manage a network of banks and financial institutions. So when we work with our clients, we get their goals and their qualifications, then we go and shop the market. And by doing this, we're able to get much lower rates, much lower costs, and we're able to really provide a superior service for our customers. And I just couldn't, I couldn't go on working at New Day. I wanted to be able to, do the best thing for my guys because I have this connection to the military. And, I was so lucky that they were willing to hire me. And here we are today. I've been very fortunate to be with them.
And I'm so fortunate to have met you and to be on this journey with you. I grew up just south of Quantico and I joined the Army in 2005. I remember sitting in my history class on the morning of 9/11 and watching history being made. And it just stirred something in me. And I wanted to give back to my country and my community. And after I was discharged from the military, I managed military housing on Fort Belvoir for 2 years before we moved to Florida in 2011. And then I had my son. And during that time, I worked with investors as a consultant until 2021. I officially got my Florida real estate license in 2022 in order to better service our community as a whole. And this year, I onboarded 2 new agents to Team Driftmark, brokered by eXp Realty. And our logo is a lighthouse because our tagline is that we light the way home. And I really want that to be our brand, and what people see of all of us, working together and guiding those who have served.
Yes. And I think a common theme that we'll hit on, throughout the presentation is building your team, building that team of success around you and having people that align with your values that have shared experience, I think is so important. I'm so glad we connected, Jessica, and we're able to do this.
Exactly. So let's talk about what makes a service member eligible for a VA loan.
Yes. So 90 days of active wartime service, or you could have 181 days consecutive of active service during peacetime. You could have 6 years of service in the Army National Guard or 6 years in the reserve. So as long as you hit one of these four categories, you qualify to take advantage of your VA loan.
And the VA loans are truly exceptional.
Yes,
What
yes.
what
And
makes them different?
and the number one thing that sets them apart is the 0% down required for purchase. Okay, this is what's known as 0% loan to value. And the reason why I bring that up is this also applies to the refinancing side of it, where you can access 100% of your home's value, where other home or other loan products like FHA and conventional will be limited to 80. So on the purchase side, 0% down, we're able to get into a home with the least amount of money. No mortgage insurance. Okay, this is really big. So mortgage insurance, an easy way to think of mortgage insurance is this is the fee that we have to pay for not putting 20% down. So with an FHA or a conventional home loan, you're going to have that additional payment every month until you reach that 20% down or 80% loan to value. With a VA loan, we don't have to worry about mortgage insurance at all. Okay, and then back into the interest rates and the requirements. As far as the interest rates go, you're going to get the lowest interest rates on the market. With VA loans, they're priced at the same level as FHA loans. Okay, so it's going to be very comparable pricing. And with a VA loan, like I said, you're not going to have that mortgage insurance, so your monthly payment's going to be lower. And then regarding the credit requirements, VA is much more lenient than conventional or FHA whenever it comes to borrower requirements. We have a wider range of qualifications that we're able to fit you into. So, for example, um, for an FHA loan, the maximum debt to income ratio is 56%. This is the maximum debt to income ratio. With a VA loan, we could go all the way up to 60, and if we get what's known as a DU or desktop underwriter approval, we can go even higher. So with that approval, that's where they're going to look at the entirety of the file. This is your credit score, your payment history, your income history, everything. It's more of a holistic approach for your qualification rather than I call it a box checking approach, right? If you can't check the box, you can't get it.
Right. And that definitely seems really unfair for our service members. Um, as far as getting prepared financially, what kind of expenses will a service member expect with a VA loan?
Yes. So even though we have that 0% down payment, we're still going to have other closing costs associated with our loan and our purchase. So for example, inspection, appraisal, title, recording fees, these are all fees that we're going to have whether we were purchasing with cash or we were using a home loan. Now, with that, we need to set aside ideally around 3% of the purchase price to cover those expenses. Now, with a VA loan, though, we can also ask for up to 6% in seller credit. So with some deals, we can actually get these closing costs also paid by the seller instead of you. That way you don't have to bring that to the closing table.
Exactly. So that is the number one reason that veterans, active service members typically will buy a home with a VA loan. Now, let's talk about some myths.
Yes. So you can only use it once. This is a myth. Okay. Now let me dive into the root of where this myth may have started. The VA loan is a primary residence loan. Okay. This means that you have to live there. Now you only have to live there for 1 year, meaning if you bought a home, lived in it for a year, decided to rent it out and move, that is completely acceptable. Okay. The other thing is you have what's known as VA entitlement. Okay, think of this as a pie. This is the amount that you're able to borrow and the amount that you're in that per home takes up a percentage of your entitlement. Okay. So with one home purchase, if you have remaining entitlement, you can still purchase another home. Okay. Now, another myth is that you can't use the property to make money. As we just covered in that first example, that's completely false. Once you live in it for a year, you can move out and do with the property as you please. And renting it out is a really, really wise decision. And it's a way for you to start building that generational wealth. VA loans are less competitive. That is also just not true. I mean, a VA loan is just as solid as a conventional or an FHA loan. And, a good realtor will be able to explain that to the seller's agent.
Exactly. The truth is that VA loans are almost preferred because the guarantee is higher than a traditional conventional mortgage.
Yes.
Now, back to the biggest myth is that no money down means nothing out of pocket to purchase. And yes, we do want to see that you have 3 to 4% ready and available in case we can't get the closing costs covered. Some of them might be able to roll into the loan, but let's talk about the average cost of inspections, appraisals, and additional inspections that might come up for specific types of properties. In Central Florida, the average cost of a home inspection is about $750. The average cost of an appraisal is about $350, and this can vary typically by home size. And then any other inspections, septic, roof, wind mitigation, property survey may or may not be required if they had one done recently and it's on file. Those can run you about $250 each. Now, those are not typically things that we can ask to have rolled into the loan, but I'm going to let Caleb add a little more to that.
Yeah. So these, keep in mind, these are just estimates. These are going to depend on the area that you're purchasing the home, the size of your home, things like that. But you really have to keep in mind that 0% down does not mean you don't need any money to close. You need to set aside things for essential closing costs. That being said, we're always going to do our best to keep these closing costs as low as possible through things like seller credits, lender credits, other creative financing methods.
Exactly. So now that we've got the money out of the way, these are the different types of homes that you can purchase with a VA loan. An existing home or new construction, a duplex where you live in one and rent the other, a triplex, or even a quadplex. You can purchase a multifamily residential unit, which is 1 to 4 units in a building. Now, do all homes qualify, Caleb?
So this is an area that it's going to be very property dependent. Okay, as a general rule of thumb, the properties have to be safe. So all of the things that would disqualify you for a VA loan are things that deem the property, not in workmanlike condition, is as it's written. So what that really means is, if there's holes in the ceiling, if you can see sunlight, if the the paint is peeling off the wall and it may have had lead paint back in the day, if there's exposed electrical, big things like that pose a risk would need to be taken care of for a VA loan, but it would also need to be taken care of for an FHA loan as well, which is one of the most common loans in America for people starting out, first-time home buyers. Now, these items can be fixed before closing. So the seller can agree to allow you to fix them. Sometimes they will cover it themselves. Often that's negotiated. And as long as these items are rectified, we can simply send a picture and continue to close on the home. Now, owner occupied, like we said, you do have to live in the property for at least 1 year. Okay, this is very important because it is a primary residence loan, but after that year, you're free to go. And then condos and townhomes. In Florida, there are not very many condos that are going to be VA approved. Okay, this has to do with the warrantability of condos and how that has recently changed. Many condos are having problems with insurance. They're condo associations. They have new requirements that they have not yet met. Now, less than 1% of all condos in Florida qualify for VA. One Stop does have products that we could help you close on a condo, but it's not going to come with the same terms as your standard VA loan. Now, many townhouses will not have any problem at all with a VA loan. I personally have a townhouse myself, and we don't have any issues with the townhouse.
That's great to hear. So let's talk about how you can use your VA loan in a multifamily situation. Now, I'm going to review a case study with you all, and this is on a real property on the market in Tampa, just a few blocks outside the front gate to McDill. And this case study was done using the E1BH and BAS for that base. So when I say, yes, the lowest paid service member on the totem pole could do this with the right property, I'm showing you actual numbers on an actual on-market property that an E1 could potentially qualify for using a VA loan, and here's how. So the average interest rate right now being around 6.25 at the time that I did this
That's
case
that's still
study.
that's pretty much where they are right now for a VA loan too, and it's pretty close.
Okay, good. So the purchase price for this property based on comparables would be about $485,000. With the BH, BAS, and rental credit, the qualifying income would be a little over $4,000. And Caleb, can you explain how we use the rental credit in a VA loan situation?
Yeah, so you're talking about the rental income if they were renting it out, like if they lived in a duplex or a triplex and they were bringing income in from those other units.
Yes.
Yeah, so we can use 75% of that rental income to supplement your debt to income ratio, right? So if you're bringing in $1,000 a month from the other unit, we can use 750 as income to counter that debt to income ratio.
Great. So the loan itself and I went based off of current tax and current insurance information for that area, would be roughly about $3,600. Now, does that mean that you're cash flowing while you're living in it? No. However, you do qualify for it and you are gaining equity. Now, remember, this is still based off of the lowest paying BAH, meaning you could do this and have a wider spread at a higher BAH level. So, the monthly cost of the service member in this case, if you lived in one unit and rented the other out, would be about $1,800. And then what happens when you go to your next duty station? Refinance it. Let's say the rates go down just 1%. Your new monthly mortgage payment at year 3 is going to be about $2,600 plus monthly tax and insurance. So you've dropped the mortgage roughly $400. But now you have two people paying rent, one in each unit at $1,800 a month. So the monthly cost to you is zero plus an extra $400 coming in that you can set aside for repairs, and this house is paying for itself. Now that you've refinanced, you have a larger chunk of your pie. I love that analogy, to go back out and purchase another property. So, what do we call this strategy? I'll let Caleb explain.
Yes, the Burr method. This is a method that I've seen used by people starting and large investors alike. And this is a great starting point for anybody looking to build generational wealth and really, take themselves to that next level financially, where they're building that financial freedom, as what I like to call it. Financial freedom is whenever, you can make money by waking up and walking to the mailbox in the morning to collect your rent checks, right? So that's our dream, right? To have enough properties where we can be free from, any sort of financial burdens that we might have. And the book that I recommend is by David Green. It's called Buy, Rehab, Rent, Finance, Repeat. Okay. And that is exactly what the BRRRR method is. That is what they stand for: buy, rehab, refinance, and repeat. So what we're going to do, we're going to, one, buy the property with our 0% down payment, right? Get into the property for as little as possible, preferably a duplex or a triplex, so that we can do exactly what Jessica said. We can live in one while we're renting out the other, minimize our expense while purchasing the largest property possible. Then we're going to rehab. We're going to do any sort of necessary repairs. And the goal of these renovations and repairs is to increase the property value. Okay. Like I was saying before, one of the most important things about the VA loan is not only on the purchase side of things with a 0% down payment, but it's on the refinance side of things where we can access 100% of the home's value. So for example, if you bought a home at $100,000, just to use round numbers, you did some repairs, and now that home is worth $135,000. You can access that $35,000 to go ahead and make other investments, pay off high interest rate debt, do a lot of things with that give you a lot of flexibility. So after we rehab, we're going to rent it. Okay. Renting it out, the goal of renting it out obviously is, one, to make money. If we can cash flow, amazing. But even if we're not making a ton of money, what we're doing is we're getting somebody else to pay down our loan. Okay. So as you hold this property, it's going to go up in value. And the other thing that it's going to do is the balance that you owe is going to go down, but it's not going to go down by anything that you've been paying into it. It's what your tenants have been paying into it. Okay. So at the end of this term, you're going to have a paid off property that you can either sell, or you can continue to cash flow and make even more every month. So after we get it rented out, this is where we're going to do that refinance that I'm mentioning here. We're going to get our money out. Okay. That way we can move on to the next investment, so that we can do our last step, which is repeat. We're going to take this method, we're going to rinse, wash, and repeat. And we're going to continue to do this until we have enough properties to where either we're comfortable and we feel like this is enough for us to retire on, or we can build an empire and cash it all in at the end of the day and ride off into the sunset.
And that sounds absolutely amazing. And based off of that, I'm going to go back real quick to this very first slide, because Caleb mentioned it's building equity. The 5-year projected equity on this home, and that's not including principal paid down, is going to be $77,000. And you would have essentially only paid 43,000. That's the 1,800 times 24 months that you were at that duty station paying that mortgage directly. So you're going to pay 43 but make 77 plus whatever principal was paid down by your tenants throughout the years. I'm sorry, does that mean that that person just made 6 figures on a VA loan, Caleb?
That is exactly what that means. And
That's right.
thinking about this from just a financial tool perspective, there's no other financial instrument in the world where you can put zero money down and control a $500,000 asset, right? You get all the advantages of that big asset, like all that appreciation, but you put zero into the game. There's no other financial tool in the world that can do that for you.
That's so amazing. And this is exactly what I want to share. And while we do have a case study that is based off of a multifamily property, I do understand that there are a lot of you out of there that don't want to live next door to your tenants. So my advice is to buy smart. You want to look at what the area rents are and factor that in when you purchase a home, so that that home is either paying for itself or cash flowing when you move. And then you don't have to sell it. You just refinance it and move on, put a tenant in it. And if you don't even want to manage it, hire a property management company. The average cost is about 10% of your rents to have someone else qualifying your tenants, making sure that the rent gets paid, booting them out if they don't pay it, and managing the repairs while you're not there. It's a peace of mind that lasts generations so that you can build something for your family for the long term. And right now, I think we could all use a little bit, excuse me, a little bit of extra stability. But
Yes.
let's say you're not moving to Florida. Well, Caleb and I have referral partners in 50 states and 26 countries. So definitely ask us who we would choose to work with if it's not something that we can help you with ourselves.
Absolutely. Absolutely. I have so many great partners that I've met along the way, people that I've done business with. It's always good to have a good referral to, have a trusted source and not take a gamble on an unknown person.
Exactly. So if you would like more information, go ahead and take a screenshot of this screen. Our information is also going to be in the pamphlet that will get emailed out with the recording of this webinar, but we are going to go ahead and open it up to Q&A. So I'm going to end this slideshow and stop sharing my screen because I would like to see all of you beautiful people.
With a V,
Alrighty.
yes, with a VA loan it disappeared on me. With a VA loan, is there a cap on the amount that the vet is allowed to borrow? Great question, D. So along with how I was saying earlier, how there's, a pretty wide range of, qualification requirements, we have a little bit more flexibility. Same with the VA loan. However, every county is going to have their general limit. Okay. So every county is different. Obviously, the higher value the county, the higher you're going to be able to go.
And there are cases in certain high value areas where the standard limit can definitely be pushed past. California is pretty much a statewide example of that one. Um, and we may have, a few areas in Florida where that may apply as well, where the cost of living is just
We
high.
absolutely do. We absolutely do. Down here in South Florida, just the standard for an FHA loan is generally under $100,000, but there's neighborhoods around South Florida where we can go all the way up to $750,000. And that I think
Mhm.
the VA loan's even higher. The VA loan, I believe we can go up to 800 in some neighborhoods.
Right. Um, so it's a really good question. And now entitlement is different than a single loan, right, Caleb?
Yes, yes. Entitlement is something very unique to the VA loan. Okay, so the background on entitlement is a VA loan is insured, right, by the government up to a certain percentage. Okay, so whenever you're using that entitlement, you can't use your VA loan again. But after you restore that entitlement, you can then go ahead and purchase another property.
Thank you so much for explaining that in great detail, Caleb. I thank you so much for your time, and I want to thank all of the service members present for your service. We aim to serve those who serve.
Thank you very much, Jessica.